Well, once again, everybody, welcome to Conversations with the Chamber. For those who may not know about us or what this whole feature is about, we used to, back in the good old days, we used to have conversations at the Chamber. But obviously with the changes, we've now converted that a slight twist to Conversations with the Chamber. And rather than talking about governmental officials and the impact on the business community, obviously with today's crisis, we're talking more about different factors of COVID-19, how it's impacting business, how business can recover, with cash flow questions, real estate questions, loan, financial assistance, relief packages, and all of those that we've done in whatever virtual technology format we were using. They're all out there on our resource page, recorded, as well as on YouTube and all of that. So please go out there and look at all those other topics. For those who I do not know, my name is Tony Felker, President and CEO of the Frisco Chamber of Commerce, and it is my pleasure to be here as we help navigate through these interesting times. And joining me today, as already introduced, Mr. Chris Lee, our Governmental Affairs Manager. And before we get to our panelists, Chris, let's just update everybody a little bit. It was about 3 weeks ago that the CARES Act was passed, actually phase 3 in terms of phase 1 and phase 2 being more infrastructure, testing, health related. Phase 3 was really the one that gave the first relief to businesses through primarily SBA loans and the PPP program. That was quickly ran out of money as everybody got their applications in. Far more applications, we'll get into a little bit more of that, far more applications than there was money out there. But then we had breaking news yesterday, did we not? So what took place there?
Yeah, so yesterday the Senate passed its version of 3.5, if you will, phase 3.5. So that we're working through the process of still seeing more relief packages coming out of DC. This is a little bit of a Band-Aid to the CARES Act, if you will, replenishing some of those funds for the PPP loan. As I look at my notes over here, there's another $320 billion that are being allocated towards the PPP loan, with another $60 billion, which we set aside for small businesses specifically. And so they're very careful in allocating some of that money in the Senate version of this bill. Now, let me take a step back in some of these details. This is what the Senate has passed. And of course, as Congress does what it does, it takes a little bit of time to get things moving. And there's always a little bit of fight between brothers and sisters. So we are on our way to the House with this. The conversation right now is that the House will pass a version tomorrow, Thursday. Now, we'll see. The House is already arguing back and forth about how they're going to do their voting process. I believe I saw a note this morning that says they figured that out, but it's Congress, so you never know. And so we're monitoring that closely, but hopefully by the end of the week, we'll see some more funding into the PPP program. And then from there, moving forward, we'll hopefully see that starting to flow to our businesses in the next week or so.
And I'm having to tap the brakes because I feel like asking you questions already, but we're not going to do that. We're going to wait and bring our panelists on board and allow them to introduce themselves. And then we'll kind of get into some back and forth questions. And again, all of our audience, be sure we've got a couple of questions already being submitted. So that's great news. So at this point in time, let me bring on, we've got 2 of the panelists are from First United Bank and 1 from BKM Sowan Horan. So first of all, Ms. Tracy Corley, would you like to introduce yourself and tell us a little bit about your banking institution and what you do there, your role? We'll kind of go through all the panelists that way, and then we'll go ahead and start getting into the questions. Ms. Tracy?
Yeah, thank you, Tony. Yeah, my name's Tracy Corley. I work for First United Bank. I'm the SBA sales manager. So my normal job would be, to know everything about SBA 7A, regular 7A products. And of course, we've all got a crash course on the PPP specific 7A products. So my regular job is that. This came on, we all got a crash course. And of course, we're ready for the second round.
So bottom line, your role is kind of, as we put this on perspective, your role is kind of originating the loans, understanding it, getting the loans processed and going from there, correct?
Yeah, under normal circumstances, correct. And for the PPP, of course, I had to be an expert overnight. So started with reading the statutory language, and then of course, anything we could get from the SBA as far as guidance. But yeah, more of a consulting, on the origination side,
And we're going to get into that guidance and understanding it very quickly. Joining you, Mr. Chris Jamison, also from First United Bank. Chris, give us a little bit of overview on your role, past and present.
Yeah. So historically, I've just been a commercial lender with an emphasis on real estate, but we've done a little bit of everything as far as lines of credit, working capital, et cetera. But like Tracy said, we got drug into this PPP process as well, even though historically I'm not an SBA lender, we would lean on Tracy to do those kind of loans. We just got thrown into the fire and said, start making some loans. And, thank goodness, because I think we had about 4,500 in the first weekend, or within the first week, at least as far as applications go. So everybody had to participate in some form or fashion.
Yeah, we want to hear more about those horror stories. Just like we all talk about, this crisis is affecting everybody in different ways, and you guys are definitely not the exception. And then lastly, and definitely not least, also from our board of directors as well, Mr. Mike Barber, BKM Sowan Horan. Tell us a little bit about yourself, sir.
Let me
Mike,
unmute there. There we go. Thanks, Tony. I'm a partner in a CPA firm, BKM Sowan Horan, and most of our clients are what would be considered small businesses that could qualify for the PPP loan. And so we've gotten a lot of questions from our clients and had to, very much like Tracy, become kind of an expert overnight to be able to advise them on some of the accounting and tax intricacies, along with just general consulting. And so we've been heavily involved in keeping up to date with all of the details that have been coming up daily regarding the loan process and the forgiveness of the loan process. And so had to learn very quickly.
So basically, to kind of sum up your role in this discussion, if people are having questions about how to document it, different options that might be out there from an accounting bookkeeping process, you're their new expert, correct?
Correct.
Very good. Well, let me just start first of all, break it out. That first phase of the PPP basically included about $349 billion. That lasted, as Chris said, they received over 4,500 applications right away. It didn't take more than a little over 2 weeks. The funds were completely depleted. More applications in the queue already. This is going to be 320 billion augmentation to that. Basically, this new, assuming the House passes it tomorrow, they just basically replenish the coffer on the programs that were out there already. What is y'all's opinion of how quickly is this 320 going to go away or be used up? And a little bit about, if you have an application already in the process, what's the likelihood, if you don't have an application in already, what's the likelihood of actually being able to receive a PPP? Tracy, from your perspective at the beginning.
Yeah, that's a good question. I personally think this second round is going to go within a week. And that's because a lot of, like you said, there were a ton of applications now that are just sitting there waiting to get the authorization. And so those are going to be the first ones, first in, right? So I think it'll be about a week. And I think if you don't already have an application with an institution, I mean, I don't know. I think that'd be a tough position. That'd be a tough position to be in, I think.
It should go faster too, because the processes were really inefficient initially. I mean, we were changing forms midway within the first weekend and having to redo some of the work, and the application for the program changed by the SBA the day before. So a lot of inefficiencies in the first week, which should be, unless they change forms again, should be a lot faster.
Yeah, that's a great point, Chris, because, you guys were talking even before it actually got funded, you guys were running. I think from our pre-meeting, I heard somebody say you guys were in the office 17 hours, 2 to 3 weeks beforehand, just trying to understand the process and seeking guidance of how this is all going to work. So the two of you talk a little bit about that. And as you said, the efficiency now, having been through it, you raise a great point. This could go even faster, much faster than it did the first time, correct?
Yeah, I would think so. And I know that Tracy's group was spending a lot more time on the front end, well, they still are, trying to understand it, like she said. And then, groups like mine were just being told, hey, here's what to do, move forward. But, they didn't even have guidance until, I don't know, 4 a.m. the night before it kicked off. Correct me if I'm wrong, Tracy, something along those lines. And frankly, we're still waiting for final guidance from the SBA.
I was going to mention that, Chris, what you just said. First, the guidance came out very late. And then ever since that, during that 14 days that the first round happened, you had Treasury putting out facts almost on a daily basis, updating it. And then the SBA itself put out 3 interim final rules. But to your point, Chris, so the original CARES Act, so every 7(a) program, the SBA provides us what we call SOP, which is Standard Operating Procedures, which is they take the statutory language, they interpret it and they say, lenders, this is the guidelines. Well, the CARES Act, when it first was implemented on the 27th of March, it said that the SBA would have a SOP for that within 30 days. Well, 30 days is this Sunday. So we're all hoping as bankers that we will get that SOP, I guess, Monday morning, because then once you get that, now you have the guidelines, everything, including the forgiveness, everything. So they are supposed to, hopefully they'll adhere to that 30 days. And then that way there will be no more of this gray area interpretation. This bank does it this way, this bank does it that way.
Very good. And Mike, let me turn it over to you because I've kind of made an assumption here. We're mainly talking about the PPP program today. Tell us a little bit more about what does the PPP actually stand for, because I always get that confused. And basically, it's allowing 2.5 months of payroll, a loan in that amount to be used for payroll, interest on mortgage, utilities. What's kind of give us a brief overview of what the PPP is all about, Mike?
Sure. So PPP stands for Payment Protection Program. And the whole idea of the loan program is to protect payroll, right? Protect payroll and some other costs, but mainly payroll. And so the calculation to determine how much the loan is generally 2.5 times your payroll, right? And so then you talk about you have a loan, and then how much of that loan can be forgiven after you've received the loan. There's an 8-week period that you go through to determine what costs have been incurred that you can actually apply for forgiveness with the lender. And so, like Tracy was talking about, some of those rules are still to come out on the forgiveness piece, but you really kind of need to plan for that as you go into it. Now, you don't have to necessarily get it all forgiven. You can take it as a loan, and it's a 1% loan over 2 years. But obviously, the biggest benefit is if you can get most of it, if not all of it, forgiven when you actually incur those costs over the next 8-week period.
Obviously, we've got a lot of callers on this call right now, and they're sending their questions in. And I'm going to turn it to Chris here in a little bit, either to let him ask a question or as we want to start working in some questions. But in the 3 weeks, basically, since the CARE Act was passed and the PPP rolled out, what are the biggest questions that you're getting from your clients in particular? Either the biggest questions or the biggest confusion or things that they don't understand? That'd be for you, Mike.
Yeah.
Okay. Sorry, I thought it was Chris or myself. I'll go ahead. One of the biggest things was, well, how to calculate the loan and what is included in the loan amount. And then how does that relate to the forgiveness is the biggest confusion. Like Tracy said, they came up with the interim rules. Then the Treasury put out a FAQ that was pretty much updated daily that was supposed to provide additional guidance on top of the interim rules. So that's caused a lot of confusion. One of the things that most clients are asking is, what can I do if I'm not eligible for the PPP loan, or what can I do from other aspects of the CARES Act if I do take a PPP loan? One of the biggest things is the deferral of the employer's share of the payroll taxes. That was a little confusing at first. People thought, well, if I'm going to apply for a PPP loan, I can't defer the payroll taxes or the employer's share of the payroll taxes. Additional guidance came out from the IRS, and it's pretty significant in that you can defer your employer's share of your payroll taxes all the way up until you get noticed by your lender of the forgiveness on your loan for the PPP loan program. And when that may come, maybe Tracy can give some guidance on that. But you got to get through that 8-week period. Then the bank's got to review it and notify you have a certain amount forgiven. Once that date's established, you no longer can defer your employer's share of payroll taxes. And those that you have deferred are due half in 21, half the end of 21, and half the end of 22. Going forward after that, you have to make your payroll taxes like you normally would. So it's a pretty big difference, or at least a clarification that enables even those that are getting a PPP loan to create some cash flow liquidity by deferring some of those, at least the employer's share of those payroll taxes.
It definitely sounds to me this is not the time when you're going to try to wing it and figure it out yourself by reading at night on the internet. Having a pro in there, somebody who really knows this industry and this business beforehand, but definitely going through all of this. Tracy, Chris, you have thoughts on that?
Yeah, for sure. I'll let Tracy expand as well. But even just on the documentation side initially, the SBA will guarantee this loan 100% for the banks. But there are situations where even on non-PPP loans, like loans that Tracy historically works on, If you don't do something right as a bank, they can pull that guarantee. So we try to document everything as best possible up front. One, so the borrower will be forgiven to the most the maximum dollars possible, and so we don't lose that guarantee if for some reason there is some issue with the loan down the road. As Mike said, this is really to drive payroll, to create employment, or even retain employment, and we don't want anything that we do to mess that up for the borrower, for sure. Tracy, do you have anything to add?
Yeah, I would just say, since the clock does start ticking for the borrower as far as that 8-week covered period, right? I would just say until we get, you do this anyway, but I would go ahead and make sure that you just, to me, document. Just make sure it's very clear. You keep receipts, you keep canceled checks, you keep those costs that you want forgiven, kind of so that you can clearly see that they were expended in this time frame for this particular reason. I would just say that. Just make sure it's very clear documentation.
And Tony, if I could piggyback on that a little bit, one of the things we've got questions about is when we get our loans, should we segregate it? Should we include it with our regular operating funds? And really technically that's up to the client, but we're advising, if at all possible, obviously there's some logistics to handle, is to segregate it, track the cost you're being paid or you're paying out of it, so that you can easily prove the documentation to your lender that what it's being used for. That may require you changing your payroll to where the account that it's coming out of, but it may be beneficial when you're going through the forgiveness piece to do that. So that's something that we're advising our clients to do.
Good stuff. We want to make certain it's not just my questions, but we want to make certain we're answering the audience out there and Chris. So Chris, what do you have over there?
Yeah, so we've got actually a bunch of great questions that have already rolled in that we could probably spend about a day and a half talking about. So I'll go ahead and just fire off one of the first ones that rolled in. And we've kind of talked about it a little bit, but is there anything specifically written out from the guidance that we've received so far that would specifically, where the bank can deny or the IRS can deny forgiveness? So let's say a business is using all of the PPP funding for payroll and paycheck specifically. Is there anything that's specifically written in there that would cause them to be denied the forgiveness? I'll go with Tracy on that one.
Yeah, I'll go with Tracy on that.
Okay, I would say, so let me answer it this way. If you use the, during the covered period, if you use what it's intended for, which is to either maintain your employees or rehire at least up to the 75%, right, of the wages, then the eligible other cost is up to 25%, which is the rent, utilities, and business debt interest. Then I would say you're good. But to answer your question, you could get a portion. Well, you could not get forgiven if there was fraud, obviously. But but you could get a portion of that would not be forgiven because you were not able to, have that head count come back to normal levels or the wages. So there is let me back up. There's reduction to forgiveness based on, looking at your employee head counts, right? And then there's a reduction based on if your salary wasn't at 75%. But if you have that rehire exemption that says, hey, were your employees, again, it's based on if you're a new business, existing business, or seasonal, but there's a period that they're going to look at. So let's just take an existing business. They're going to say, on February 15th, how many employees did you have? On April 26th, how many employees did you have? And then on June 30th, was that amount of employees the same as it was for that other period? Okay. In other words, if you have that rehire exemption, then you don't have to take those reductions. So I guess that was a long way of saying it, and maybe Mike can be more clear. But yes, there is the bottom line is, yes, there could be some pieces that are not forgiven if you don't meet the purpose and the spirit of the law, which is either keep your employees or rehire them back, and at least 75% of the wages.
Yeah, one additional thing there too. That was exactly what I was going to add as well, as far as the employee headcount and the wage reduction. But also, keep in mind your loan amount is calculated 2.5 times your average monthly payroll costs, right? Well, that extra you got an 8-week period to incur the cost. So there's that extra half, right, that is supposed to be intended for mortgage, utilities, interest, things like that Tony mentioned. But your costs may not make up that amount. It may be less than that if you have low mortgage, low rent, low utilities. And so there may be an extra amount that you don't get forgiven because you can't just incur enough costs to make up for it. So now you don't have to, you can choose to keep that amount just like you can for any other amount that doesn't get forgiven, and keep it on a 1% interest loan for 2 years. You could pay it back if you don't think you need it. So this is just determining how much is forgiven. You still use the proceeds for other things. You just won't get forgiven.
And you guys raised.
I'm sorry,
Go ahead.
that's a good point because, like I said, what if I only had 75% of what I got for the PPP for payroll and or whatever? And you could just take those proceeds and pay the loan off. Whatever you didn't use.
Mm-hmm.
Right. You guys raised two very good points. The whole premise of the act is to be able to cover payroll so you don't lay people off, or to bring people back that may have already been laid off, but you can bring them back. And the other thing, Mike, and we talked about this the other day, which I think is great. Yeah, if some of it isn't forgiven, it's not like you shouldn't go for it. It's still a 1% loan, cheap money over 2 years. The biggest fear that people have right now, we focus so many of the webinars, is all about cash flow right now.
Right.
And to have that cash in place just in case is a great thing to be able to do. Cash is king again.
Yeah, plus payments are deferred for 6 months. So you're not making a payment for 6 months regardless.
Exactly. Chris.
I'm sorry, let me add one more thing, and let me clarify with Tracy, but yeah, there's no payments for 6 months, but after that, that's part of your 2-year loan. So then you would have 18 months of payments, an 18-month amortization versus a 24-month amortization.
Right.
So
Correct.
it's a little bit shorter time period, but just wanted to clarify.
That's a good catch. Now, we don't want to be 6 months behind right at the beginning right there. So, Chris Lee, I know we got two Chris's going here. So Chris Lee, what else do we have?
Yeah, so I'll just roll to the next question, and I'll read it verbatim just for simplifying, trying to read through some of these. There's some great questions and have a lot of detail in some of these. So seems to be putting the cart before the horse, but several folks are wondering, if you apply for and receive the PPP loan as a self-proprietor, how does one submit proof for forgiveness when there's technically no payroll, only net income? And Mike, you might be able to, between Mike and Tracy, I'll start with Mike.
Either one.
So go ahead, Tracy. Or you want me to?
No, I mean, you probably know the same thing I know. You're using the net income off your Schedule C.
Yes.
Okay. And then the new guidance that came out said, if you are self-employed and you're using your Schedule C net income and you have no payroll, this is going to be kind of we're going to explain it to our borrowers, that you're going to be capped at just that 8 weeks worth of that. In other words, even though you could have applied for 2.5 times, when it comes to forgiveness, it's only going to be 2 months worth.
That's a good point. Now, also bringing up sole proprietors, they got a late start on everything, did they not? Because they had to wait an extra week before. Yeah. How are they going to catch up on this sort of stuff? If the money is already in short supply, I mean, let's not even get into it. Is it fair? But how are they going to recoup? Do they have a chance to get some of these funds? How does that work? Tracy?
Well, yeah, their applications were due a week after the first round. And maybe this may come out, at least I saw some aspects of it in the new law that the Senate passed. Maybe Chris Lee can comment, but there may be at least a certain amount that is allocated to what at least I read were considered the unbanked or mom and pop. I think I read to be about 125 billion. So that may help out those independent contractors from getting access to those funds. One additional thing on the Schedule C, just to make everybody aware of, you have to use your 2019 Schedule C. And that's regardless of whether you filed your tax return. So if you've not filed your 2019 tax return, you need to prepare your 2019 Schedule C for purposes of documentation for getting the loan. So that's one important aspect.
Yeah. Hey, going back to that question beforehand, I think if I interpreted the question correctly, is how are they going to prove that when they make their distributions to themselves, how are they going to prove that? So I heard that question.
Yeah, good. And I can tell you what we're doing, Chris. We've been telling these or self-employed, write yourself a check.
Interesting. Mike, you're
probably over a time frame, probably not all at once, right?
Well, yeah. Yeah.
Mr. Chris Lee, other additional questions?
Yeah, so I'll go ahead and read the second one off again. Initially, we were told by our relationship bankers that they would not consider loans under $10,000. How is the second round going to address smaller businesses not requiring a large loan? I don't know if that's something that maybe Chris Jamison can touch on. I know that there's specific outlines in the proposed legislation coming out of the Senate that do kind of address some of that stuff, but I don't know if you can shed some light
In
on
the
that.
first round, I'm not aware of any issue with being, I think we had a minimum of $1,000 if I'm not mistaken. So I don't know that that was an act requirement that it had to be 10,000. Sounds like it was a bank rule that they created themselves.
So if
as far as
somebody
the next
were,
round goes, it's up to their bank again on what they intend to do, but I haven't heard anything about minimum loans like that as far as the act goes.
yeah, so if somebody were to run into that instance with their bank that they currently have a relationship with, do you have any recommendations or suggestions of how they can go about still trying to access some of these resources?
Yeah, just reach out to other bank contacts they may have, ask their CPA, ask their attorney, make calls to other banks. Yeah, I mean, just kind of like whatever helps them.
Or try the EIDL program.
Oh, that's a great.
They
that's a great
replenish
idea.
that too.
Yeah,
Good point.
That idle, that's up to, well, we've heard different amounts. Originally, it was a much higher amount, and then it got reduced down to maximum of 10,000, I believe, 1,000 per employee. And that's basically a straight grant unless you go for the larger SBA loans, correct?
Yep. And for those who don't know that, you just go to the SBA website, and it's probably the first page you see. You can click on their COVID-related picture. I can't remember what it says. And it takes you to their applications, and you can just apply for that grant right on the website.
That's
you-
all
you-
through the SBA.
Yeah, and you can do both. You can do an EIDL loan and a PPP loan. There's some different aspects of how the forgiveness is calculated. If you've got an EIDL, especially that $10,000 grant amount, in determining what your forgiveness piece is on the PPP loan. But you can do both, and maybe even use the PPP to pay off the EIDL. But yeah, you don't have to pick one or the other.
Yeah,
Okay,
and
so
just to follow up on that though, if you use EIDL for payroll, then it has to be refied into the PPP.
Good point.
So in other words, you can't double dip. You can't use it for payroll for both. Okay. And yes, if there's a forgiveness component, then that's excluded from the advance is excluded from the
Yeah.
PPP.
Darn,
it's
I
a
thought I had
payroll
found a
related.
loophole there. Okay.
Yeah.
No loophole that I can take advantage of there. Chris Lee, question.
yeah, so that kind of ties into what you were just discussing with the EIDL loan and the PPP loan. There's a question about I'm reading as I'm talking, so I'm trying to multitask. It's not working very well. Let's see if I can do this. If we repay, so the question is, we were also funded $6,000 for the EIDL loan. Originally, we thought that this was the PPP program, but we soon learned after applying that it wasn't. If we repay that to the SBA, can we receive full forgiveness for our entire PPP loan, assuming that we use it for paychecks? So is that part of the refinance that you were talking about, Tracy, or can you expand on that maybe a little bit?
Well, so that would be the first question. What was the EIDL loan? What did you use it for? Did you use it for payroll? If you use it for payroll, it has to be included. And then the second question was, what portion of that, if you use it for payroll, was the advanced or the forgiveness portion? Because you're not putting that into the PPP. So I'd have to know that. So I guess if you used EIDL for PPP, yes, it goes in. What happens when you go to do the forgiveness, you're going to have, that part's not forgiven. See what I'm saying? So I guess
Blake,
I'd
you
need to
got
know
the-
what was the use and was there a forgiveness component on the EIDL side?
So I believe if I'm scrolling, we're getting new submissions as I'm reading through some of these questions, and I think so they haven't used any of the EIDL loan, if I'm reading this correctly. They haven't used any of that first $6,000 that I mentioned, and it's just sitting in their account. So
I would not use it for payroll, is where I'm saying.
Yeah.
Not use it for payroll.
Do not use it for payroll, then you don't have to roll it. It doesn't matter because you didn't roll it into the PPP. Just don't use it for payroll.
Yeah.
Okay.
Or just pay it all back if you don't want to use it at all, and it has no effect on the PPP loan.
Yeah.
Yep. You have another one, Chris?
I've got 100. I'm kidding. I've only got 10.
Keep coming in.
But
That's all I keep going back for you.
yeah. So You've kind of talked a little bit about if money is not used for payroll, will there be a penalty? And Mike, you touched on that a little bit. It kind of turns into a 1% loan over 2 years. Is that correct?
Yep.
Okay. We went ahead and answered that one, so I feel good about that. Okay, so this one's about hourly employees. Let's say I've got 5 hourly employees. One of them quits and doesn't come back to work after I get some funding. Tracy, you've kind of talked about this a little bit. I think Chris Jamison has as well. But how do I move? Can I move her hours? Can I move their hours to another hourly employee? So I had her at 20 hours, and I had another employee at 20 hours. Now that other employee is at 40 hours. Does that work with the forgiveness guidance that you've kind of heard of?
So the forgiveness guidance talks about full-time equivalent, which we don't even have. Don't ask me what that means yet, because we don't know equivalent. But again, yeah, my understanding would be you could replace that head count, right? Even if it's increasing, from 20 to 40. The questions on forgiveness keeps asking, how many full-time equivalent did you have this date? How many full-time equivalent do you have at this date? And then how many do you have come June 30th? It's not saying the same exact employee, right? And same thing with wages. It's not, so that's my understanding today until we get further guidance.
Right.
Good stuff here. I'm so glad you guys know all of this, because my head is hurting already just trying to keep up with it. Once again, folks, if we haven't said it 100 times already, build your relationships with your lenders, your financial planners, your CPAs. Build that relationship now. It's kind of like back in landscaping. When's the best time to plant a tree? 20 years ago. When's the next best time? Today. So work on those relationships today. Chris
Hey,
Lee.
Tony, can I comment on the forgiveness piece real quick from a tax standpoint?
Absolutely, sir.
So the forgiveness is not taxable. So you will not be taxed on the forgiveness, considered forgiveness income. What is still unclear though, and maybe they'll put it out in this next round, I'm not sure, is whether the payroll costs are deductible if you've been forgiven a loan to pay those costs, right? So there's some thought that those payroll costs may not be deductible. And so you would need to consider that if you're looking at the possibility of whether to keep the loan at 1% over 2 years or to take the forgiveness. Just an additional item to consider. Once we get the clarification, obviously you'll hear about it, because it's a big question a lot of people are asking, but that's an unknown piece right now.
Very good. Chris Lee, we've got about 5 minutes probably left. It's amazing how on a topic like this, it's flying by. So lots of stuff, but we want to make certain to answer as many questions as possible. Do you have some others?
Yes, I do. So I've got a good one. So this is, as an essential employee, can we include a gratuity bonus for those frontline staff who are working during this time? So as part of the payroll and the PPP forgiveness process, can we, as employers, include a gratuity bonus for frontline workers who are working during this time?
Sounds like a Mike question.
Well, let me make sure I understand the question. So I think it's talking about, can you include that in your payroll costs in the 8-week period for purposes of forgiveness?
That's my understanding of
I don't know
this
why you
question.
wouldn't. Yeah, I don't know why you wouldn't be able to. Tracy, you have any comment on that?
Yeah, I've gotten a lot of people ask, can we, front load vacations? Can we add, yes, similar type questions. This is what I would say. Again, since guidance is expected, hopefully, on the 26th, I wouldn't do that just yet. In other words, I'd err on the side of caution. I'd go ahead and do my normal payroll stuff right now, and then hopefully by Monday we'll have guidance on, because it's silent. The act is silent to whether you can do that or not. It doesn't say you can. It doesn't say you can't. So I would personally, I would go ahead and just do my normal stuff right now, at least for the next 3 days, and then when the guidance comes out, hopefully that'll make that clear. Because I have gotten a lot of questions about that, whether it's extra gratuity, adding vacation, adding raises, stuff like that.
If somebody has questions on this between now and then, even then, short of having that relationship already established, where do you guys recommend for people to go for hopefully as much good advice and guidance as possible? Do you have any recommendations on that?
Treasury.gov. Almost every day, they're updating the fact sheet.
Sure.
Or they could go to the SBA, .gov too. But this program, the normal 7A is administered by the SBA, Small Business Administration. This one is a little different. It's co-administered by the Treasury, U.S. Treasury and SBA. So I know Treasury's been having their facts updated pretty much every other day until the program ran out. I think the last one was on April 13th, I think.
Okay.
Actually, they updated on the 17th. I don't think it's any different than the 14th.
Okay. Chris, I think we have time for one more question.
Okay. I might be able to get this one out in the short amount of time we have. So has there been any discussion to extend the 8-week period where business is where the business is closed, and thus furloughed employees are better off on unemployment insurance than sitting around at the office? For those funds that are not going to be forgiven, are there restrictions on the use of these funds by the borrower? So those are two different questions popped up in our chat. So I wanted to get those both out. So I guess we'll start with Mike. Any discussion about the 8-week period in regards to businesses that are closed? Have you heard anything along those lines?
No, I haven't heard any extension. The only thing that I would add to that, for people that have already furloughed most of their employees, I think Tracy touched on this earlier, is you still can rehire those full-time equivalents back before the June 30th cutoff date, right? And get the full amount forgiven. So you may choose not to do that, obviously, because you can't make a decision by June 30th, and then you can just take it as a loan, 1% over 2 years, and use it for whatever you need. But as far as extending the 8-week period, I haven't heard anything about that at all. But I do know a lot of companies are faced with this decision, knowing they've already furloughed most of their employees, whether to hire back and get that forgiveness by the date, or to just take it as a 1% loan.
So I would add to that the caution, the challenge if you wait until June 28th to hire everybody back. The problem is you're not going to have cost. That will be, in other words, here's your loan at 100,000, but it may wait period of cost is only 50,000 because I waited till the last day to hire everybody. Well, then you've got 50,000 that's not forgivable because you didn't incur the cost.
Right.
You see what I mean?
You won't get the amount you incurred reduced, but there's not additional amount, right?
Right, exactly. So that there's that. And then the second question about, are there any restrictions on the funds once it converts to that 1%? Now, that is a very good question. I'm not sure that was even, I know I've read everything in the act, and that is not even, that's silent. But that's a very good question.
It's somebody doing their homework and being proactive there, thinking outside the box. I like it. Well, unfortunately, I know, Chris, if we've got additional questions, I think what we might try to do, we'll try to take those questions, we'll circulate it to you guys. We'll try to get those questions answered offline. But I want to go ahead and, first of all, thank all of you. This is obviously very difficult topic that we don't have clear guidance on, pun intended, quite yet, but we're working through it. But I want to just give each of you an opportunity just to kind of do a closing statement, whether that's advice you would give at this point, your prognostication of what's going to happen with this funding, is there more to come, anything along those topics, and we'll throw it out there to Chris Jamison first. Give us your closing thoughts on what you think is going on, closing piece of advice, etc.
Yeah, what's going on? Every headline I read on a money internet page just looks dark and bleak, and so I'm concerned, obviously, with the economy. I'm hoping this will help. I don't know if it's going to be long enough. Is my question. Is the 8-week period really going to help businesses if they can't even reopen until a month or two from now? So that's my biggest concern. Is really just the economy as a whole. To your point earlier, take this time now or very soon to really establish a relationship with your bank. Go to your community bank and set up an account, get loans, whatever you need, whatever your needs are for your business. Go ahead and establish that relationship, because if they know you, you're going to have a better chance of being taken care of down the road in situations like this.
Great point.
Really the best advice I have right now, as far from my perspective.
Thank you, sir. Tracy, your closing thoughts?
Yeah, I mean, just as far as just this PPP program, again, what I said in the beginning, document, right? And like Mike had said, it's better to, if you could uncouple that, the use of that from the other forgivable cost. But yeah, no, and what Chris said too, this was a Band-Aid, and I just don't think, I just don't know. It is kind of bleak, and And I don't know how you help people like dentists or restaurants who are shut down and then they have this 8-week period right at closing. I feel for them. I just don't know if it's the answer. This is going to be the answer. So
It's interesting you use the term Band-Aid. I just had an email conversation with one of my counterparts and said, hey, 8 weeks here, that's not going to save businesses if they're going to go under. This isn't going to, it's a Band-Aid on a busted ship. It's just not going to do enough. And so that will be interesting to see. Mike, I'm hoping for some positivity out of you, Mike, as we clean things up here and close out.
Well, a few things that I was thinking about is, number one, as Tracy mentioned, the rules on the forgiveness are coming out on Monday, hopefully. And there's going to be, there's already a lot of calculators out there that some people have put out there. There's been nothing official. So I would definitely pay attention to how that calculation is officially put out there by the SBA or Treasury on the forgiveness piece. For those that have their applications in but don't, are expecting money in this next wave, please check with your lender to make sure they have everything they need to get your application approved by the SBA. These lenders are dealing with volumes they never dealt with before. They're also got lenders that have never dealt with SBA before, and so they're under a lot of pressure. But if you could just make sure that your loan application is ready to go for the SBA, I highly recommend that, because even a small thing may prevent it from getting approved in this next round. And then maybe the last thing is, we have a lot of people, a lot of businesses, especially in Frisco, they're in the real estate area, that may have commercial tenants, may have may have apartments with residents or renters, and as much information as you can get to those on this process as well, specifically those independent contractors and self-employed people, maybe do your part to help get that information out to them as well, if not already. So with that, I think the Band-Aid approach, while it's temporary, at least it's something. I know at least it's something, and hopefully there'll be a next wave of funding that will help out those that aren't able to get it this time.
There we go. Thanks so much, Mike Barber, BKM Sowan Horan, and Tracy and Chris with First United Bank. I also want to thank Chris Lee in front of the camera here, but the entire chamber team working behind the scenes to make this possible. For all those in attendance today, we'd love to get your input. Send us an email. I think Chris has got his email up there, or just info@Frisco Chamber. Let us know how this was. We're always looking to improve things. That's always been something that we've been focused on, continuous improvement, and that's definitely the case now. So if there are things in the webinar that we could have done a little bit differently, let us know. If there are topics out there that you'd like to hear about, let us know. We plan on doing this probably on very much of a regular basis as we adapt to this new virtual area. And matter of fact, we're even looking at possibilities out there. I'll just be completely honest. We're looking at possibilities that these webinars can be sponsored in the future. And so be thinking about that as we look at new ways of doing things and approach the new normal. So once again, to our three panelists, thank you guys so much. As I said earlier, this crisis is impacting everybody in different ways. You guys are busier than ever and trying to absorb all the data and help our community come back together. So thanks so much. And everybody stay strong, be safe, and we'll catch up to you at the next time. Once again, check out all the webinars on the resource page. Stay up to date on what's happening. We will get through this one way or another. Thanks, everybody.
thank you.
Tony.